485% on one trade in just 7 hours. And I have every single piece of proof right here. But before I show you how it happened, I need to explain to you what most AI traders are getting wrong. Most people are trying to sell you this dream that if you are unprofitable without AI, AI will magically fix that and make you a profitable trader. To me, that is a complete lie. I still execute all of my trades manually, and the only way that I use Claude or any sort of LLM as part of my trading is to help me refine my trading process, help me review my journal, find patterns in my behavior. This is the kind of thing that AI is very good at, as it saves you lots of time. And in this video, I'm going to show you the exact AI tool that I used to validate my breakout trade. First, let's get into the proof. So on August 19th, 2026 at 10:30 a.m. was the first time I made a post talking about my interest in longing ETH. This was the chart that I shared where we had a SR level, but we'll go deeper into that after. This was the buy and sell from the exchange that I used. We can see that I bought it at the bottom here at 1.9K, sold my first installment at around 2.28, and my final TP was at 2.4K. Here is the percentage P&L with the entry price and the mark price. And lastly, this is my current journal for the month of August. You know, being more of a swing trader, I don't take many trades, but I kind of focus on those higher probability setups. I had one trade on Monday for around 1.46R, then nothing for the past couple weeks. And then the banger trade that I called on Wednesday was around 18.6R. Now let's get into the AI tool that I built. This is my breakout checklist. Now, before I take any trade, I sort of have my own pre-trade checklist. But initially, this is something that I did on pen and paper. And at the start of the video, I spoke about the importance of using AI for your process and not to execute trades for you. And this is one of the ways that I updated my previous version of my checklist into a more interactive dashboard using Claude. And the way that it works is you have these 5 sections. Once all of them are approved, you will have the whole dashboard turn green as such. But if one of them is wrong, then the dashboard will go red and it will say no trade. Each of the inputs in this dashboard are based off of the countless data that I've gathered over the past few years. So I know that when I want to take a breakout trade, I need to see every single one of these things go green in order for me to execute that trade. If you want this dashboard for yourself, then I will be giving it away for free in the description below. Let's get into the first point, which is market context. Now, before I take any sort of trade, whether it's a breakout, mean reversion, or range extreme, I need to understand what context, what is the market environment we are in? Are we in an uptrend? Are we in a downtrend? Or are we in a rotational, more range-bound environment? This is important because if I want to take a breakout trade, I don't want to be taking a long in a downtrend. Or if I take it in a range-bound environment, it's going to be a bit riskier for me. So the way that I gauge my trend is using the daily, 12-hour, and 4-hour 1225 EMAs. For me to have a green light on the market context, all 3 of them need to be green. So starting off on the daily time frame, I can see that we are clearly above the daily 1225 EMAs and they are in green. The same thing goes for the 12-hour. And finally, we head over to the 4-hour where we can see that the bands are back on bullish and prices trading above them, compressing into the horizontal SR, which is the second point on my checklist. So first, I'm simply going to mark out that price is above the daily, above the 12-hour, and above the 4-hour. Now, all this section turns on green. Next, we're looking at the support and resistance. The support and resistance levels could be horizontal or diagonal. You know, I've taken both. Personally, I like the horizontal levels as it just gives me a much cleaner invalidation. So in order to define a horizontal level for a breakout, what I want to see is a minimum of 2 or more touches. This is not something that is just made up or random. You know, I've journaled hundreds of trades and gathered data on every breakout trade or any other setup that I've traded. And I'm noting down all of these different confluence factors, looking at how many touches compared to the win rate or expectancy of the trade, the average duration of the consolidation prior to the breakout, or even the average time between each of the touches. Just small things that I look to gather when I want to refine my strategy even further down the line. So when I'm looking at this current SR level where I took my trade from, you can see multiple instances of price trading into the SR level, failing to close a strong candle body above, and we're simply wicking into that level. So what you're going to see is lots of aggressive buying and new longs opening above the swing high, trying to anticipate the breakout before it's confirmed, which is the biggest mistake that you can do. So overall, we have more than 2 touches, which is what we want to see in order to validate the second phase of our breakout checklist. The third point is one of the biggest ways that I've improved my trading is through the use of order flow. So what we're looking at is the volume and delta spikes. Now at the bottom, I also have a text giving a sort of summary for all of these. I need to see a spike in delta and volume on the footprint to confirm the breakout. The problem with simply looking at a candlestick chart is that you cannot see what is happening inside of that candle. You don't know if there's a lot of aggressive market participants getting trapped. So with all of these wicks here, you could have low volume, which is telling me that there aren't a lot of market participants behind this move, which means it's likely not to be a breakout. But when we start to use the footprint to confirm our breakout, which is exactly what I'm going to show you now, this is the footprint chart on the 1 hour using the same SR level marked out. All I'm going to do is zoom in exactly to the point where I entered my trade so that I can show you what I look for to confirm that breakout. I want you to focus your attention on these 2 columns at the bottom, the first one being volume and the second one being the delta. Now, because this is a 1 hour time frame, this is going to show me the data for every single 1 hour candle, just like a candlestick chart. But the difference is I can see the volume being transacted in each of these candles, as well as the delta. Now, to confirm a breakout, what I'm looking for is a spike in both of those. I want to see a spike in new market participants, ideally from new longs opening. So I want to see initiation from new longs coming into the market, starting to push anyone who's trying to short offside, which just adds more fuel to the fire when those shorts start to cover their positions. Covering their positions simply means that when you are in a short trade and price trades against you into your stop loss, most people are afraid of price trading against them. And they think like, hey, if price trades into my stop region, then I'm going to be wrong. So what they do is they get nervous and then close their position. So if I'm in a short position and I decide to close that trade, I have to buy it back. And that's what it ends up like in the books. So when you have new longs opening and shorts closing, it adds even more fuel to the fire. So what we see is we have a spike in volume. So if you compare the previous bars, you can see the shading is a lot lighter. And then suddenly on this candle here, when you have a strong body close above the key SR, you have that 672 million as well as the 92 million delta. So you see a spike in both of those numbers as the open interest is rising, as price is trading higher, as we're closing a candle body above, which to me is enough to enter that trade. So heading back to our checklist, volume and delta spike, yes. If you're enjoying the video so far, don't forget to like and subscribe to show your support. And if you want to see more of these trade breakdown style videos, then just let me know in the comments below. Moving on to the fourth point, which is something that I've already covered in the previous, being trade confirmation via candle closure. Now, before I was using order flow to refine my trade execution and also my trade closure, I simply relied on a strong candle body close above of a key level to validate a breakout. As you can see here, if you just trade along every time price gets above, but then never sort of closes a candle body, then you're going to get stopped out so many times, which is why it's important for me to wait for that confirmation. So as soon as we start to see price close strongly above of that level, then I have my confirmation. I look at the footprint beforehand, looking for a spike in volume, a spike in delta to confirm to me that we have initiation from buyers. Now, a little bonus piece of value to give to you is when you see price trading into an SR level, and for example, right here, we have a swing high. What I like to do sometimes is just mark out those swing highs, not because I want to take a trade from them, but because I want to observe how price reacts from them. So what we see here is price takes out the swing high, but what is the current market structure as price is trading into that level? We can see that we've just been forming higher lows, higher highs. We've taken out the swing high. So if price is taking out a swing high, you're thinking, okay, we're likely going to just show some rejection from that level. But if price continues to grind higher after taking out a high, that to me further solidifies the argument that we are likely to break out. Now, once we have that candle confirmation, we click on yes, and we currently have 4 out of the 5. And the final one is stop loss placement. The reason I put stop loss placement at the end is because you should never open a trade unless you have a stop loss. And I would like to add something on top of that is you should never open a trade unless you have your stop loss and you know how much you're going to lose if your stop loss gets hit. Risk management is the most important thing in trading. And one of my favorite quotes from my mentor is you are a risk manager first and a trader second. One of the main reasons why people blow up their trading accounts is the lack of risk management. They are looking to gamble, make quick returns, but the reality is that slow and steady wins the race. Going back to the stop placement, one of the rules that I have is looking for a consolidation prior to a breakout. Now, if I have a consolidation prior to the strong candle close, which then confirms my breakout, then I know that I can place my stop loss below these lows here, because those higher lows have been respected and should be respected. There's no reason for price to trade back into those levels unless my trade thesis is likely invalidated. Now, is this just something that I randomly figured out? No, it's backed by data. When I'm backtesting, I'm testing various stop loss placements, whether it's using an AMA system, using ATR bands, or using fixed structure, such as the consolidation that led to the breakout, hence the higher lows. All of these things are what I gather, review, and then decide which one I want to implement into my trading system. Once everything is now validated from the checklist, I have the green light to then execute that position. Now, initially on this trade, I was simply looking for the mid-range, but there was a Trump tweet and price just continued to trade higher. What's important to mention is when I take profit, I like to observe how price reacts at a certain level before just deciding to fully close out the trade. So as we can see here, when price was trading into this mid-range, we had a minor pullback and then price just closed back above. So I still saw no reason for me to just close out my trade. I wanted to continue to ride that momentum because these kind of setups, I do believe there is some aspect of luck, because if it wasn't for Trump's tweet, I do not believe we would have had such an aggressive move in such a short period amount of time. But when I took this trade, I didn't have the information that Trump was going to make an announcement during his press conference. So I didn't know, but I still executed that trade because it was part of my trading system. When I took this Ethereum trade, I knew that it does have certain characteristics. One of them being that ETH doesn't mess around when it's ready to go. It just goes and does a big green dildo, which was very much the case as we can see from this chart. After such big moves like that, it's so easy to fall into the aspect of greed, where it's like, I want more, I want more. But the reality is when price is trading into a level that you've defined where you were going to look to take some profit and you're up significantly on that trade, then you need to take some profit, which is what I did. I was like, I would be an idiot not to take some profit. Therefore, I am taking profit. I do mention how I still think that this has some legs to go, especially considering the way BTC was trading above the range high. So at the time, you can see that price just traded above the mid-range. And once we then had this second leg, that's where I made the decision to close out most of the trade. And the last piece of feedback that I give is that if you've made good money on these very strong moves, make sure to just take a step away, give yourself time to mentally reset. Because there are a lot of people as well who might have been sidelined on this crypto rally. And the fact is that there will always be another trade. The worst thing you can do is start to feel FOMO, start to feel greed, trying to chase longs at the top, thinking about shorting just to revenge trade. The best thing you can do for yourself, take a step back, mentally reset, whatever you have to do so that when you come back to the desk, you have a clear mind. If you want to see more trade breakdown video with a touch of AI, then let me know in the comments below. I hope you were able to find some value in this video. I will be giving away the Breakout Dashboard for free, as I do with any other tools that I build on this channel. If you're enjoying the video so far, don't forget to like and subscribe. Thank you so much for your support, and I will catch you all in the next video.